Well, good morning, everyone. Welcome to our Friday morning trading room. And you know what that means. Yes, it's Rabbit Hole Friday. Well, I'm going to try to tackle a really big subject today. Had a couple people requesting information about Fibonacci retracements. And of course, Fibonacci's that is just a huge um, area. You talk about your rabbit hole type subjects. Fibonacci's certainly qualify for that. There is a lot of stuff that has been done with Fibonacci retracements and Fibonacci extensions and Fibonacci time zones and so on it goes. I won't be able to get into all of it today, but we'll at least make a start. So, what are Fibonacci levels? If you've been in the trading world at all, you've probably heard people talk about Fibonacci's. Some movies and books have touched on Fibonacci's. I always seem to impress my wife and relatives when we're watching a movie and they're talking about a Fibonacci sequence, and I start to rattle it off, and then the actor rattles it off. Because it sounds so exotic. Fibonacci's, there's a really good Wikipedia article if you want to get into it in depth. It's actually a mathematical sequence where the sum of the current number is made up, or the current number is made up of the sum of the last two numbers. So in other words, you take a number sequence. So you have 1. 1 plus 1 is 2. Then you go back one number. So 2 plus 1 is now 3. 3 plus 2 is 5. 5 plus 3 is 8. And 8 plus 5 is 13. And so on it goes. 21, 34, 55, 89. And it expands very, very quickly. What catches traders' imagination is that Fibonacci's occur in nature. That's kind of what made traders think, hey, if Fibonacci's occur in nature, then they must occur in the marketplace as well. Well, yes and no. Fibonacci's occur in nature in the sense that if you count it, it took the time to count all the scales on a fish, it would be a Fibonacci number. If you counted the branches on a tree, it would be a Fibonacci number. If you counted the leaves on a tree, it would be a Fibonacci number. Petals on a rose is a Fibonacci number, and so on it goes. It's also been called the golden rule. What I find interesting about Fibonacci's is that Fibonacci's were not brought to the trading world that way. You can actually blame Charles Dow for kind of introducing Fibonacci's onto your chart. Charles Dow, yes, the fellow for whom the Dow Jones Industrial Average is named, and he was the originator of the Wall Street Journal, was a writer slash speculator early in the 1900s, around 1920 or so, 1920, 1930. And what he had a habit of doing was he would split his chart into thirds. So if he saw a move, say from here to here, what he would do is he would split his chart. At first he'd split it in half, and then he'd split it in thirds. So he actually had a 33% level, a 50% level, and a 66% level. Well, for those of you who have been doing Fibonacci's at any time at all, you know that is very, very close to the, oh, it looks like my eyes were a little bit off, but it's very, very close to the fib levels of 38.2 and 61.8, as well as the 50% level. So from Charles Dow splitting his trends into thirds, mathematicians looking to get into the market said, hey, that's really close to a Fibonacci level. Let's put Fibonacci's on there. And you can see Fibonacci's, they have fractured into more than just the three levels. The Fibonacci tool from NinjaTrader will give you the subset of the 23.6 and the 76.4. These values here are just the inverse on the opposite side of the 50% level, by the way. In other words, the distance of the 23.6 to the low is the same distance as the 76.4 to the high. They're just the mirror image, 50% line being the pivot, the point where it changes the reflection. So after that, traders started getting quite excited about Fibonacci retracements. And as with most things trading related, they work until they don't work. I've worked with some people who are very proficient fib traders in that they are very proficient about drawing fib tools on their charts. They'll get lots of fib levels going on. And some of them get to the point where they can really eyeball a fib level really well. I'm not going to knock Fibonacci retracements too much because I do believe that they have value, especially in the sense of what is called Fibonacci confluence. And when I was thinking about this subject for today, I realized that Indicator Warehouse does not have a Fibonacci confluence indicator, so we are going to be rectifying that shortly. But what confluence means is you get a lot of Fibonacci occurring at the same price point. So here we have three recent swings that you can see. And even within these three, you can see we have a fair amount of confluence. We have an overlap. Here at the 38.2 is overlapping with the 76.4. We have another overlap here. The two 61.8s, I'm just going to call it 62% level. At the 62% level and at the zero there, we've got mild confluence here at the 76, the 50, and the 24. And then again, we have some confluence here at the 100, the 38, and the other 38. And some confluence down here. All right, so these levels, which I've highlighted, seem to be fairly active as far as Fibonacci retracements go. And you can continue to do this. You can continue to go through your chart and highlight your fib levels and keep reinforcing these Fibonacci zones. And you can see after a while, you won't be able to see straight. But what is interesting is that you can see how some of these levels do seem to be a little bit more influential. So you can highlight them even more. This one down here seems to have a little oomph to it as well. as does this one right here. By the way, to get to your Fibonacci retracements, you can use your shortcut key, F8. You can click here from your drop-down menu. You can see they have a whole section for Fibonacci's. Like, it just, the whole concept grew like a weed. Not just do we have the retracements, but we have extensions, we have time extensions, and we even have something called the Fibonacci circle. Like I said, we're not going to get into all that today. Oops, I didn't mean to delete my lines. Doggone it. All right, well, right now we're kind of in the sideways drift, and I do believe we had a fib level here. We had one right about there, and we had one right about there. So you can see the Fibonacci levels holding prices reasonably well. What would be interesting with the confluence, and I know a few traders do this as well, is if you're using fib levels and confluence, how do they match up with the support and resistance suite? And those levels potentially being a little bit stronger. So here at the support and resistance suite, we have 69.63, so that's very close to the top one, and then 69.40, let's call it. All right, that's a little bit below this bottom one. The thing that I shy away from Fibonacci's is that it's very subjective which level you want to base your retracement on. Oops, stop that. You know, you get so many lines on your chart. As you can see, like, that's one valid retracement. This is certainly a valid retracement, as is that one, even though it's smaller. And then you can just keep going back and forth, back and forth. It's the type of tool, in my opinion, that works really well in hindsight. You know, the fib traders will be looking at this and they'll be saying, whoa, look at how well the fib levels are responding here today, right? We had a beautiful retracement of this move, went all the way up here to the 62% and then reversed, got down here to the 62% and reversed, and so on it goes. Yeah, Mark writes here, he says, I use a tool that uses fib confluence to put support and resistance type lines at specific confluence levels. Interesting point is that I found that when those levels line up with the support and resistance suite, they are like magnets. I use the confluence to weed out which trades I'll take, and I'll use it for stop and profit targets. It works pretty sweet, he says. Yeah, so you see, there is some value to it. And I often wonder with these types of tools, is it a self-fulfilling prophecy? Do traders rally the market to that point because there's so many people following Fibonacci levels? Or is it an actual natural phenomenon? I have the same kind of question when it comes to floor pivots. Do they work because they work, or do they work because so many traders use them? Here's another level. Where's the top of this one? See, now it becomes a little subjective. Do I use this high? Do I use this high? Do I use this high? Typically, when you're using Fibonacci retracements, you go with the last major swing. That's what most traders do. But within this swing, you can see there's several smaller swings that can also come into play. All right, so how do you trade Fibonacci's? That's what we all want to know. Well, that's where I have my other sticky point with Fibonacci's, is that they tend to be very predictive in their usage. And by that, I mean you're second guessing, or you're guessing what the market will do next. Okay, while we're waiting for the market to do something there, I'll pick on this little move right here. So let's say we draw our Fibonacci level on here. And NinjaTrader has a very interesting video online about how you can use your Fibonacci tools. It's very helpful. It is different than Ninja 7. And I had to play with it a little bit to figure out how it works. So to get to your properties window, you need to double click on this line, or you can click on that line to make your tool active and right click to go to your properties window. And what you'll probably want to do is you'll probably want to extend the lines to the right so you don't have to guess too much at it. And then you probably want to edit your price levels. For me, I don't need 7 levels. I don't pay that much attention to the 76. I don't pay that much attention to the 24. If you want it to be like Charles Dow, this is where you could edit your values and turn it into 33 and 66. We may do that before the end of the morning and just see how it compares. Okay, so we've got the 5 levels we're going to apply, and I guess we could save a template as well. So the way fib traders typically trade is they will either look for the market to retrace to the 50% or the 62%. And then they will look to buy. They'll look to buy because this is a rally up. Of course, if you were looking at this move here, you would look to sell a move back to the 50 or the 62%. Why not the 38? For whatever reason, the 38 does not seem to have the immediate follow through. You're going to get stronger signals if you wait for the 50 or the 62%. So what you're going to end up doing, depending on how much you want to risk, you can either park your order to buy, and you'll be using a limit order right here or right here. You can use the 50% if you're got a little bit more money to trade and you're anxious about potentially missing out on the move. You can use the 62% if you have less money to trade and you don't mind missing the odd move. Regardless, stop losses are down here. So if you're trading the 50%, that is your risk. If you're trading the 62%, that now is your risk. Oh, okay. A couple of comments here before we get on too far. Frank says, I've tried the Fibonacci pivot lines and found them to be very close to the standard pivots. Yeah, so no real surprise there, I guess. Yeah, Mark says, you ask 50 people, you'll probably get 50 different ways to trade fibs. And Frank asking the question of the ages with Fibonacci's, how do you select the levels? Exactly. How do you select the levels? Because I'm assuming what Frank you're referring to is, how do I select this swing versus the tiny little swing? How do I select the big swing versus the little swing. And that's exactly it. That's the difficult part with Fibonacci's. I tend to look for major swings. I try not to micromanage. As I'm going to point out here shortly, Fibonacci's work best if you look for 3 pivots. And this will make more sense when we get into extensions. But let me finish with this, and then I'll kind of get into that. Okay, so we have now, we're anticipating a reverse. We've got at least a couple of bars going against us. We're anticipating a reverse. And okay, the market now hitting our 50% level. So those of you who were perhaps a little better capitalized or maybe just a little bit more anxious, you could buy in at this point. You have now bought the market. The market is moving down, but you have bought in. Okay, now you're taking some heat. You're not too worried because your stop is down here. You've left a reasonable stop. And now you 62% traders have bought in. And look at that. The market starts to make a turn off of that 62% level. So, hey, maybe there is something to this Fibonacci stuff after all. Let's take a look at another example while we're waiting for the market to get some stuff going on. Oh, actually, let's take a look. Do we have anything going on here yet? Yeah. All right. So here is the move out of the open. So here's our move. Let's edit our tool. We'll shoot the lines over, and I'm going to remove. I'm sure there's a better way to do this than the way I'm doing it. All right. So let's, you can see we've hit the 50% level. So I'm a little bit late on that. Let's throw in our buy limit order. Oh, actually, you know what? I'm going to just use the chart trader buy limit. There we go. So I got a buy limit right there at the 62% level. And this now is my trade. That's my buy limit. My stop loss is going to go down here. Oop, wrong. There we go. And this now is my trade based on the Fibonacci levels. This I find this annoying as well with fib levels is if I parked an order here at the 50%, look, it came within a couple of ticks of my order and then continued higher. So if the market took a serious bounce from here, if the market was especially strong, I would be left on the sidelines. It's a different way to trade. It makes you more predictive about what the market's going to do rather than reactive. And like I said, it does depend on your own personality as a trader. Here, we may have to do this on another chart because I'm not sure the eagle's going to reach back far enough. Well, here, let's do it on the Raptor because I know there's a lot of Raptor traders in the room. Let's see, is this going to be the same swing? No, see, the Raptor actually displays it a little bit differently. Once you have a chart up with your Fibonacci lines, you probably can just reuse the chart rather than redoing it all the time. Okay, so here is the 62% on the Raptor. We'll take it right on the number, and then this would be the 100% down here. So currently, oh, see on the Raptor, we would have tagged the 50%. We could be long from there. Yes, Mark says you can save that as a template. Frank's asking, how do you edit the fibs? Okay, do you see this faint line on your indicator? You have to highlight that, and you can see now your tool is highlighted. You can either double click on that line or you could select properties. And that will bring up your panel. Extend lines right. That just makes it easier visually. And then if you hover here over your price levels, you see it gives you the option to edit, and then just left click and it will bring up your levels. You can select, you can remove, you can add. We'll be adding shortly. All right, let's see what they're going to do. They're going to come down now, and all right, so they brought me in on the 62% retracement of this last move. Let's see if there's going to be any sort of follow through from here. Now, we're assuming the market is bullish at this point, right? We bought in, we're assuming the market is bullish. And if it's going to remain bullish, well, we would look for a profit target at least here at the 100% level. It's not looking very promising at the moment, is it? All right, so that obviously not working out very well. Ray was asking, what is the profit target? Well, I would at least look for 100% retracement on that move. Okay, so let's go back now to the subject of how do you select the levels. Typically, what you want to look for is you want to look for this kind of pattern to develop. You want a 3-point pattern. So it's going to be like this. And many of you will immediately recognize that as a bull flag or this type of arrangement. And this will be a bear flag. So once you have this type of setup, you could probably draw your fib level like so. So you're kind of waiting a little bit for your fib, for your trend to develop or try to develop, and then draw your lines accordingly. Now, a safer way to trade fib levels, other than the predictive way that you just saw me try to do, is to use something called fib extensions. So you now have your pattern as so, right? We've got the rally up, we've got the little bit of a pullback, and now it looks as though the market's going to try to head higher. Rather than try to buy it on the retracement and hope that the market reverses, you can actually buy when the market proves that it can continue higher, essentially buying above the breakout or buying above the last move on a breakout. So this puts Fibonacci's now in a slightly different perspective, in that we're going to use them more as a profit target. And in this sense, I don't mind the Fibonacci so much. So let's select our Fibonacci tool again. We're going to draw it on here and right click on the indicator. We're going to shoot the lines over, and now we're going to edit the price levels. Now, for the extensions, you actually, unless you want to keep some of these lines, you really don't need them. So we're going to add some lines now. The two most popular extensions are the 127, oh, come on, add. The 127.2 and the 168, or sorry, 161.8. Oops, got it. All right, now, many of you who are a little mathematically inclined are going to recognize these as just being a 62% level above the 100% level and a 27% level above the 100% level. All right, so we're going to add those in there. Oh, looks like I drew them the wrong way. Oh. I wanted them up there. Stop it. Okay, so let's try that again. Sorry, I was a little bit more proficient with my Ninja 7. Oh yeah. Okay, so let's try doing that the other way then. There we go. I want the 62% up top here. Then it should shoot the lines up here. Okay, so right click on that, and we're going to extend the lines over. We're going to edit. I'm going to remove that one, and we're going to add the 127.2, and we're going to add the 161.8. There we go. That's better. That's what I was after. And you could save this as a template as well to give you your extension lines. So these lines now are going to become our profit targets. When and if prices break the 100% level, we're going to look at the 127 level as a profit target and the 162 level as a profit target. And you may be surprised to see how well that actually ends up working. tool over here. Okay, so let's say we have this swing that we looked at previously. Right, we have our swing up. The market has come down now. It's made that third point. We could have bought in here, and we're taking some heat, but let's see how high it goes. Okay, it meets the 127 level. Oh, and that's as high as it got. But this is a very, very healthy profit from down here to up here, the 127 level. That is a really, really nice move. And these are the kinds of moves that keep fib traders coming back all the time. We can also do it on this smaller move. See this smaller move right here? We have our 3 points. Right? We have the low, the high. We have the reaction. So now we can use, we're buying in at this point. So we can use the 127 or the 162 as a profit target. So it reaches the 127 and it hits the 162, and there's a little bit of a reaction. Now, even if you had waited to buy on a break above the 100, look at how the market actually got some giddy up at that point. If you had bought down here at the 62% retracement, I know it says 38, but that's just the way the chart displays. If you had bought down here, you really weren't clear whether the market was ready to head higher yet. Maybe you could couple it with another tool like the Bollinger Suite or MACD or stochastics or something to give you an indication that the market is ready perhaps to head higher. But at this point, there was no way to really know. But look at what happens when the market breaches the 100% level of the last retracement. Okay, Bollingers are in sync, and now we waste no time, or very little time, getting up to our profit target. A modest target to be sure, but a profit target that we were able to reach anyway. So let's do that with this last move. Oh yeah, the last move never got high enough. Okay, I'm going to see if I can get by with just one fib tool here. I'm going to add a minus 127.2. Oh, is that going to allow me to do that? Minus 127.2. And a minus 161.8. Let's see, am I as clever as I think I am? Oh, look at me. Okay. So the tool may get a little cumbersome right now. It's awfully heavy. But let's take a look at this little fib move right here. So we have the move down, we have the move back, right? So we have our pivot, essentially. We're looking for pivots, we're looking for flags. So the market comes back, it gives us a 62% retrace. Oh, that looks wrong. Oh. Hold on here a second, folks. This should probably be 1.382. The other one should be 1.738. 728. Let's see if that makes it better. No. No, it's not going to work. Darn it. Got to build another one to the downside. All right, hold on here. Bear with me. See, I'm not as clever as I thought I was. Okay, so this will be my bullish tool, and now I got to build a bearish one. And like I said, I'm sure there's a better way to do this. I'm not going to take the time right now to figure it out. And it's okay if you want to round these numbers as well. Yeah, there we go. Okay. You don't need to take it down to the decimal place. It's okay to make it 127 and 162. Really, it's not going to matter that much. People always fretting over the minute details of trading, and that's not where the money is. Okay, so we've got this little swing going on, right? And you can see how we could bracket it higher, and we can also bracket it lower. So if we're going to bracket it lower, again, there's two ways you can get into the trade. You can try to short it on the retracement, or you can look for it to break the 100% level. If it breaks the 100% level, 127 is your first profit target, 162 is your second. Okay, there you go. You're short now. It breaches the 100%. And now you're at the 127. So your first profit target is hit, and you get down to the 162 as well. What I find interesting is on these types of reversals, when the market does breach, is how quickly it will get to your profit target. And in this case, you can see it actually went a little bit further still. Now comes the tricky part, because note we have yet another little 3-point turn, right? We have a high, we have a low, we have a retrace. And at this point, we have breached the 100% level. Or would it be more accurate to categorize the trade this way after the last 3-point turn? This is the problem trading Fibonacci levels. I have a tendency to stay with the most recent major move. And unfortunately, major is a very subjective quality. But there you have it. I would probably classify that as a major swing. We did retrace 38%. I know it says 62, but it's actually a 38% retracement, which will tend to happen in quickly moving markets. All right, so there's our entry. This now our profit target. And look at that. A few traders also following Fibonacci's were not willing to be the last ones out. Somebody took profit early. But even so, you probably would not have done much worse than a break-even type trade. At the very worst, you would have been stopped out somewhere around here when you breached that high. So that's the thing with Fibonacci levels, is there's a whole lot of subjectivity to it. Okay, let's see where we're at right now. Okay, well, are we bullish? Are we bearish? Well, let's use the eagle here. We'll follow the eagle lines, and we'll call this bullish here at the moment. And here is our 3 points, right? We went up, we went down, hit the 50% level. We breached the high. So let's throw in another order to buy up here just to simulate this trade. So we're looking to buy a break of the 100% level. And let's look to take profit near the 162, which is well within today's range. We were there just a little while ago. Stops for these Fibonacci trades, they should go down here. Doggone it, I keep selecting the wrong one. They should go down here where your fib level began. Although I would probably manage it according to my 2 swing rule. So there's swing 1, there's swing 2. That should be ample. And let's see if they can get up from here and find our profit target. Certainly looking a little bit bullish right now. Okay, so this now just a simulation of the earlier breach that would have occurred right here. All right, so we're long, and okay, now we broke the 100. We're getting a little giddy up, which is what we want to see. The 127, of course, would have been the first target, and that would fall right about there. All right, so the 127 is our swing target. All right, at this point, I would probably take the trade to break even, but we're playing with fib tools, so let's see how we do here. Well, they're taking their time. It would be nice to, be able to buy in at the 50% level. I'm not entirely sure how I would gauge that. Maybe if in this case, the eagle, if it did one of these little stutter steps, I don't know. Or maybe if the signal was in sync with the Bollingers. Because we don't have a clear signal, not on the Eagle, not yet anyway. Well, they're thinking about it. But you can see, the 127, it hits that zone, a little bit of a reaction. And again, I remind you of this every day, but the big money in trading is not made in finding the monster move. Come on, monster move. It's not made in finding this kind of move. It's made in finding the high probability trade, taking your profit, whether it's $50 or $100, and then capitalizing correctly, which means taking 2 contracts or 3 contracts or whatever the case may be. Not quite the giddy up that we saw in the other move. Take that line out of the way. And at this point, you should probably consider rolling at least to here. Come on, are you going to get up there or not? You can see how trading this way kind of gives you a broader perspective on the market, right? You're not so concerned about the market waffling through here because this is what you're expecting for a profit objective. Ray's asking, has the video recording issue been fixed? Yes, it has. All the videos should be uploaded. So in one sense, I do like that about the fib tools, is that it forces me perhaps to be a little bit more patient with a trade. Okay, you can see we've kissed our high probability profit objective. So on a normal eagle trade, let's say on this red bar buy signal down here, we would have made our $200 profit. Oh, and look at that, they're starting to react. What do you think? Is it because there are traders shorting the 162% level, or is it because this is a recent swing high, the high of the morning? See, that's what I mean about fib levels. Is it a self-fulfilling prophecy, or is it something that actually happens because that's the way the world works? That's the way the market works. Interesting little debate. Just curious, was I right on the 162? No, look, I was even a little bit shy of the 162. We'll just give it a minute here and see whether or not they can get up there, and then we'll take a look at another tool. or pardon me, another market. Oh, they're trying so hard. I think it's the high of the day that they're struggling with. It's more curiosity at this point. In reality, I'd be taking profit already. There's no way I would let that profit get away on me. But I'm curious at this point whether or not it can actually get to the 162. And maybe that's something to consider. If you're going to use your extension lines, do you want to leave it at 161.8 or do you want to dial it down to 160? Do you want it to be 127.2 or do you want it to be 125? You don't want to be the last one holding the bag. Everybody's leaving the market but you. Oh, there they go. They did find it. They got up there and managed to get the profit out of the trade. I wasn't sure they'd be able to get that far, but they did. And now we're seeing a little bit more follow through because we've breached the high. Now, on your Raptor, your Falcon, your Hawk, you're going to have more opportunities for these types of setups because, of course, you're going to get more signals. You're going to get more of these swings. Here, let's build the bullish one. Oops. Stop it. Oh, ninja. There we go. So let's get rid of the 76 and the 23, and let's add the 127 and the 162. Oh, I drew it on the wrong side again. And like I said, you do have the ability to save these as a template, so you don't have to do this all the time. I'm a little bit slow. There we go. All right, so here we have a market making a swing. It came down at least to the 50% level. Oops, looks like I deleted the wrong one. we go. Okay, so it looks like it did a 62% retracement, came down here to the 38% level, and then started to rally. Well, at this point, you might say, okay, if it gets above the 100, seeing how we've had a big 62% retracement, and Eric says the markets that make 62% retracements are more likely to have follow through, maybe I will look at the 127 and the 162 levels as profit objectives. And so up we go, and we make the 127. Hooray for us. And that's all there was in that move. So here is the dilemma. How do we know we can buy off of the 38% level? Well, Mark mentioned he likes syncing them with the support and resistance suite. So there was a nice retrace there on the support line. Maybe that would be enough. Honestly, I'm throwing some of these questions out here because I haven't played with it in that respect. So part of Rabbit Hole Fridays are to turn you loose and you can play with it yourself, see if there's any value to it. All right, so now our trend has changed. We don't have a retracement yet, but you can see the current bar is perhaps getting a little bit bullish. So what I'm going to do is I'm going to anticipate that that will actually turn into a bull bar. And what do you say we do a 50% retracement on this one? So I'm going to short a 50% retracement. I'm going to do it on a limit order. I'm going to put my stop loss up here. Remember, you always have to have a stop loss going. And what do you say we try to go down here to the 162 as a profit objective? Okay, there we go. So, actually, if I'm buying early, I don't need to make it work that hard. We'll go here to the 127 as a profit target. Okay, so I bought in early because it's a relatively small swing. My stop is above the high. I could have waited to buy a 60 or sell a 62% retracement. Bollinger's not in sync yet. All right, so there's the 62% retrace. We're already in the money. This is the nice thing about using limit orders is if you're right about the swing, where's the dollar amount? There we go. If you're correct about the swing, you get in early, you get an opportunity not only to maximize your profits, but get early profits as well. So the market not working quite as hard. Oh, imagine how we would have looked like rock stars had I sold the 62% level. My goodness, we would have almost caught it right on the turn. And if you're looking for a scalp, well, we just kissed the scalp target. Okay, Bollinger's now coming into sync. I think what you'll find as well is if you're going to pursue Fibonacci levels, they tend to do better on the mean Renkos. I think if you try to duplicate this on say a 5-minute chart or a 15-minute chart, the price swings are concealed within the time frame, whereas the mean Renko bars breaks it out so that you can see it more easily. Okay, so we can probably roll above that stop right there, that swing. And again, in actual fact, I've got over $100 in profit. At the very least, my trade would be at break even if I wasn't already taking profit on target. But let's try to swing this out and see if we can't get to the 127 level. The Bollinger Suite now fully in sync, so that's encouraging. And like I said, maybe the one good thing about the fib levels, and maybe I'll start employing them for this reason, is it does seem to make me a little bit more patient on the trade because I believe the market's going to go and produce a 127 retracement or extension of the last move. A little bit of a reaction there now to the support zone. In real life, I don't think I could or would tolerate a pullback like that. I know it's only 50 bucks, but still, it's 50 bucks. We'll see. I've said it before, the thing with trading is you're going to learn a lot about yourself, what kind of tolerances you have for greed and fear. And I don't mean those in the necessarily negative versions, but it's a fact that we all have certain tolerances. And there's survival tolerances as much as anything. No, see, there we go. So it was working perfectly up until the profit target was trying to be met. So like I say, there's your challenge with Fibonacci levels. And maybe by next week I'll have something a little bit more concrete for you. I'll try to research them a little bit more, but Honestly, I'm a little. The reasons I shy away from them is because they are so predictive. I like Mark's suggestion where he uses them, the extensions or the confluence zones in relation to the support and resistance lines. I do believe there is some value to Fibonacci confluence, and it's probably more to do with so many traders using fib levels, or maybe it is a naturally occurring phenomenon. Here you can see we have a very, very fast move higher, so I would be looking to make a buy on a limit down to the first retracement. Oops, wrong tool. There we go. I think if you're going to do these early buys, you could certainly look to take profit at the 100% level. Right? I was trying to work that trade down here to the 127, but there was no need for it. I could have easily taken it at the 100% level and still had a tidy profit. I think it was like $150 or something. Oh, they're still not ready. You need that 3-point swing. I believe you need that 3-point swing to make your determination of where your fib level should be drawn. And you can see all I'm doing here is adjusting, looking for that pivot to come in, for the market to actually turn, and I would look to anticipate that third swing. All right, gang. I think we're going to button stuff up here today. Yeah, I see there's a couple of comments and questions here I missed. Okay, Keith says, excuse me. Keith asks, good morning, Eric. Well, good morning, Keith. He says, I hopped in late. I always had an issue with where to place fibs, which is why I never use them. How do you know at what swing to place your fibs on? That is the great mystery with fib levels, Keith. And we'll just do a little review here before we close up. There's two primary ways to trade fib levels. Way number one is to try to anticipate the retracement. Right, so let me get this out of the way. Sorry. Here we go. So you see your move from, let's do this move here. You see your move from here to here. Oh, I wonder, hold on a second here, folks. Oh, I don't need a bullish one and a bearish one. I can just flip it around. Where'd that other one go? Here, I don't need that one. Okay, so the great mystery. Which swing do you plan your fib on? And there's no easy answer to it, Keith. It's the dilemma of all fib traders. We're going to be looking at fibs here probably for a little while. So we may address this again next week. Typically, if there is something resembling a trend, you'll try to stay with the trend side as much as possible. Sometimes you can use another tool, like down here, the Bollinger Suite is bullish at this point, so you can use that to confirm your swing. But the way that I do it when I use fibs, which is not very often, is to look for a 62% retrace. And that third point. Essentially, I'm looking for the market to build a bear, in this case, a bull flag. All right, so I have 3 points now. I have my high to low, and I have my reverse. Essentially, an ABC if you're doing Elliott's waves, or the beginning of a 5-point wave with Elliott's. But if you get that 3-point swing and it has made a 62% retracement, then you can probably draw your fib levels on there. And at this point, when I do use them, I kind of use them more for the extension sake as profit objectives. Now, some traders will start to buy in as soon as we get something, any old reason to buy. So here's a little mini trend line break. They'll start to buy at that point, and then they will have their profit objective up here, either at the 127 or at the 162. And there's nothing wrong with that. You can see, okay, we got to the 127 without too much trouble. Oh, no, we never did make the 162. But that could be a very tidy little trade. So I think the key is the depth of the retracement. You're going to find that the trades that retrace 62% of the prior move, when they give you an excuse to get long, whether it's, like I say, a breach of a trend line, or actually a signal on your tool, or whatever reason, maybe you're following the Bollingers here and the Bollingers have gotten bullish now, or a very simple break of the 100% line, right? A new breakout. There's the market broke higher. I'm buying. I'm looking for a move to the 127. Just a modest move, but it's still enough to get you your profit. And of course, it's not trading more often that we're after. It's after finding a high probability move that we can place multiples on. So let's see where we're at right now. Let me bring my fib tool over. I'm not really I'm bad-mouthing Ninja here. They should have made it easier to get a handle on this thing. Oh my, look at that monster move higher. Okay, so here now we have our third swing, our third point. Pardon me, not swing, third point. Is it a 62% retrace? No, not nearly. But what about this little move here? So put that there and bring that up there. Is that a 62% retrace of this move down? Yes, it is. And so you could look to short, and look, you made your 127 target and you're working toward your 162. So I think the key is, like I say, the depth of the retracement. If we get the market moving a 62% retracement, and it is going to read 38.2% on your fib line, but you're looking for the market to retrace 2/3 of the prior move. If you get that, then you can look for an excuse to get short, and you could possibly use your 127 as your retracement zone or as your profit objective. I don't think that's unreasonable. See, this one only did a little 38% retracement, but maybe the market is moving so quickly that that's all we're going to get. But you will find that if you wait for the 62% retrace, so that means we got to see the market come all the way down here, and you look for a reason to get long, there's a good chance the market will move back here to the median line. So there you go. There's my forecast for the day, folks. If the market gets down to 69.75-ish, I'm not going to make a trade right to the number, but you can look for any buy signal to get long. Even if it's not in sync, just pick up a buy signal and look to take it to the median line. Won't that be something? They got a ways to go, though. Now, I don't think I would just buy in blindly with a limit order. I'm not that brave. But if I drew a trend line, perhaps, or the Falcon gave me a buy signal, I could be persuaded. See, here we're getting a late filter entry signal. And if we believe the market is retracing here to the 38% zone, there's a reasonable short. See, there's a lot of ways that you could employ this. I may have to adjust my profit objective a little bit because I'm expecting a bounce off of the 38. Maybe we'll be a little bit more conservative. There, we'll make it work a little harder. Getting a little bit of buying now on the 50% zone, so there's some traders there looking to capitalize on the 50% level, buying it early in anticipation that the market is going to go to 7,009.5. These rabbit hole Fridays are dangerous. I'm maybe inclined to start putting fib levels on my chart. Yeah, we'll see you, Mark. Mark says, good topic today. I'd like to revisit in the future, especially what swing to use. That is the dilemma. I'll see if I can't get something for you a little bit more concrete next week. But that's the way I do it. If there is a 62% retracement of the prior move, well, that worked out nicely. Okay, let's see what happens now as we encounter the 62% level. And here's just a buy signal. So I'm just going to look to buy on the next buy signal. There it is right there. Oh, come on, market. Okay, so I've just bought the next buy signal on the breach of the trend line and the fact that it's a buy signal. Like I said, 100% retracement would be a huge move. The 127 is the big target. Initial stops do need to go below the bottom when you're buying this early. And for a move like this, it's certainly out of the realm of affordability for most. You could take your chances and run it below the 62% or the 38% zone and hope the market doesn't breach. But you can see we don't really have any clear indication of bullishness just yet. And I guess technically we are a couple of ticks shy of the 62%. Again, I don't split hairs on this kind of thing. Traders tend to get lost in the minutia of trading. And sometimes you got to step back and see the big picture. Well, we certainly have a scalp target. We were very close to our high probability objective. And it looks like they're still waffling around a bit. All right, gang, I'm going to close up shop here. Have yourselves a wonderful weekend. I will see you again on Monday. I don't know how alert I will be. I guess the clocks are going ahead this weekend. Who thought that was a good idea? All right. We'll talk to you later. Bye for now.